Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because although I know it's been a tough week for many with Bitcoin's dip down to 92,000, the good news is that it's really not surprising that Bitcoin is down 12% in a week where the S&P 500 is down 4%, especially when we account for the fact that Bitcoin rallied roughly 60% since the November election and the S&P 500 only rallied 6%. So by investing in Bitcoin, we're getting 3x the downside, but 10x the upside compared to the S&P 500 over the past month and a half. And you can see this very clearly in the performance comparison over the past year. Bitcoin has absolutely skyrocketed higher recently, and the S&P 500 rose higher as well, but much less by comparison. But recently, with the drop in the S&P 500, we see Bitcoin dropping quite a bit more than the S&P 500 did, and altcoins like Solana and Ethereum dropping a lot more than Bitcoin did. And whenever there's bad news like the FOMC meeting we had this week where the Fed announced less rate cuts for next year, market makers and whales take advantage by selling into that weakness and triggering a leverage liquidation cascade. After the FOMC, we saw $1 billion in liquidations in just 24 hours. And if we look at the 3 days surrounding the FOMC meeting, that was almost $2 billion in liquidations. And it would have been a lot more if it wasn't for the liquidation event we saw last week, which already reduced a lot of the leverage, especially in altcoins, that we had in this market. We also had a new one-day record in Bitcoin ETF outflows coming in at just under 700 million. But if you take a look at the inflows we've seen over the past 2 weeks, a bit of profit taking and outflows isn't that surprising. And that's something that we have seen quite often along the way ever since these ETFs went live back in January. And for weeks, we said the market could not stay in extreme greed forever. So after some ETF outflows and after a couple billion in liquidations and a correction by Bitcoin, for the first time in almost 2 months, we have the crypto fear and greed index into the neutral region, which is a nice sentiment reset after all of the craziness we've seen over the past few weeks. The most common mistake I see when Bitcoin has this type of drop is you have the permabulls screaming from the rooftop to buy the dip and that price is going to skyrocket immediately. And you also have the bears and doomers confidently shouting that this is the beginning of a much larger correction. But usually both of these camps end up being wrong, and instead Bitcoin ends up consolidating and chopping around a bit before picking its next direction. And we can see this mistake quite clearly by looking at the ratio of mentions on social media of people saying to buy the dip and how it hit an 8-month high. And if we look at what Bitcoin's price was doing 8 months ago, last time we saw this many people calling for buying the dip, most investors were expecting price to break out and recover immediately, but the price kept on dipping for months. And by the time the correction and reaccumulation was finally over, most of those investors that piled in on the first dip gave up hope. We do have to face the facts that Bitcoin is gearing up for a pretty ugly weekly close here, which likely means we see a few weeks of chop and correction at a minimum, but I am happy to change my mind if we are able to reclaim 100K on a weekly closing basis. But as of right now, we have a very clear false breakout above 100K with a bearish engulfing candle back into our range. And when we saw that in January of this year, we saw a 20% correction. When we saw the same thing in July of 2023, we saw a 20% correction there as well. So as of right now, if this weekly candle were to close like this, my base case has to be that at the very least, Bitcoin is going to consolidate in this range before going higher. And if we were to get a close below 90,000 on a weekly closing basis, I would have to expect a 20 to 30% correction before Bitcoin's next move higher. And I will write all about it in tomorrow's free weekly report, as well as the changes I'll be making to my portfolio depending on the outcome. And because this is likely going to be my last video for 2024, because I will be traveling the last week of the year, I will make sure to post updates as often as I can on Twitter since I won't be able to make any videos. And if we do end up seeing that weekly close below 100K, I will update the probabilities on our what's next for Bitcoin chart. The reason why I have this 75 to 85K region highlighted is because we saw a very quick move to the upside with very little support built on our rally from 70K to 100K. So I wouldn't be surprised if Bitcoin came back and filled in some of those low volume areas on this correction. But my base case remains unchanged. After this correction, I'm still expecting Bitcoin to put in new highs in Q1 of next year and put in a cycle top sometime around late Q1, early Q2 at the latest. But of course, I'm willing to change that if we see something change in the data or the price structure, but my base case remains unchanged for now. Global liquidity is also telling us that Bitcoin is likely to see a correction, especially because we're in that 2 to 3 month lag window. The good news is even though the dollar index is rallying into our risk off region, I do think it'll top sometime soon over the next 2 to 3 weeks max, because I think it's very unlikely that the Fed will only cut interest rates once next year, because I'm expecting the unemployment rate to continue higher. And I think that's going to force the Fed to cut rates more than just once, even if inflation remains stubborn at close to 3%. As for my portfolio, still haven't made any changes. I like to make them Sunday evenings or Monday mornings once we have the weekly close and once there's less panic and noise going on in the market. My cash percentage has gone up a little bit as the value of my spot holdings has gone down, and I got very lucky taking some profits earlier this week and sticking to my plan, even though the charts were looking so bullish and I was still expecting upside. But as we look forward, I don't expect much for Bitcoin for the remainder of the year, just chopping around in this very expensive region. The correction we saw in Bitcoin and the S&P 500 resulted in a larger correction in Ethereum, and perhaps we're building out some kind of meme inverted head and shoulders here before Ethereum rallies higher. Again, I do not believe in quintuple tops. I do think Ethereum trades above 4K in Q1 of next year. Even though we saw some spot ETF outflows for Ethereum recently, it's nothing compared to the inflows we've seen over the past few weeks. And we did see the SEC approve those Bitcoin and Ethereum ETFs, where investors will be able to buy both with just one product. And I think that could bring Ethereum a lot more inflows as investors try to just get some index exposure to this asset class. And I remain quite optimistic for Ethereum in 2025, especially if the new SEC allows staking rewards to be passed on to Ethereum ETF holders instead of them missing out on that the way it's set up right now. As for Solana, quite a painful chart here, but it's no surprise that it corrected more than Ethereum and Bitcoin. We saw a deviation above the 2021 Coinbase all-time high, and now we've seen a huge deviation above our range high going back to March of this year. We really want to see this reclaimed immediately. It's nice that we're holding the 20-week moving average, but this really needs to reclaim that range high of 200 if we're going to see some upside anytime soon. Of course, a lot of that is going to be driven by what Bitcoin decides to do. I'm still optimistic for Solana for 2025, but we really want to see that range high reclaimed immediately. As for traditional markets, not the best weekly candle for the S&P 500 this week after all of the FOMC drama, but we did see a nice bounce going into the weekly close, and now we're going to find out if we'll continue higher next week or if we're going to see more follow through to the downside. And of course, that's going to have a huge impact on what Bitcoin decides to do next. Bitcoin has always been correlated with risk assets like the S&P 500, and I think the spot ETFs only strengthen that trend. So we really want to see the S&P 500 recover soon if Bitcoin is going to recover as well. But I'm still expecting huge deficits from the federal government next year, especially if we look at what happened during Trump's last term. I don't think that trend is going to be different this time around, and that debt eventually has to get monetized, and eventually we have to see that carry over into the money supply. And as long as we continue to see that fiat currency debasement, I remain bullish on risk assets like the S&P 500 in the longer term, and bullish on Bitcoin as well. But anyway, let me know what you expect. Is this a major deviation before a much larger correction, or can Bitcoin just consolidate back in our old range and then continue higher? Would love to know what you expect. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you in 2025.